What's going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about on this video, hit that like button. But anyway, today we're going to be talking about the Alibaba earnings report that dropped on August 3rd, which was Tuesday. And immediately the stock actually dropped. If we go to a 5-day view, you can see it dropped 5% on the day of the announcement. 5%, just like Amazon. Amazon also did the same thing. Like once they dropped their earnings, they actually fell like 7 or 8% on the day. But as you can see, it's recovered ever since. The market right now, everything that's surrounding Alibaba is all so much fear. Any kind of little news that comes out that's in a negative light is going to hit the stock immediately, and the stock is going to drop. But as I like to say, short-term fluctuations lead to long-term opportunities. But anyway, so if we look at some of the quick earnings, as I was reading through this Investopedia article, you see some of the earnings and why some people freaked out and some of the reasons that investors were not so happy with the results. So the first thing is on earnings per share, they actually beat earnings per share estimates of analysts actually coming in at $2.57. Everything is actually in Chinese yuan, which is the currency that everything is reported in. I exchanged the currency, and this is actually $2.57 versus the analyst expectation of $2.23. Now on revenue, they actually missed the analyst expectation, which is one of the things that actually caused the stock to drop, actually coming in at $32 billion, which is what they brought in versus the analyst expectations of $33 billion. As you can see, it's not a massive miss. It's not like they missed a whole massive gap or anything like that. But at the same time, any little thing, like I said, any small miss, and it's not just happening with Alibaba, it's actually happening with every single stock. We saw it with Apple when they announced they actually dominated earnings, but the stock still fell. We saw it with Microsoft. They dominated, stock still fell. Amazon, they didn't dominate, but the stock still fell. The only one that bucked the trend was Google. This is where we are in the markets right now. Any good news is not going to send the stock flying higher because so much is being priced in that there's just not a whole lot of room right now. But anyway, and finally, consumers, or rather users of the platform, actually the expectation was them to bring in 830, but they only brought in 828 million customers, or this is the number of users that they now have on the platform, which people were not very happy that they didn't bring a lot more in. But you know what? Let's start right there with the users, which is something that I'm actually more excited about versus what everybody else saw and got upset about, or not upset, but were sad about seeing that it only grew 11%. But the thing that excited me about this number is seeing their international numbers actually grow. If you compare this number to their last quarter numbers, they actually had 241 million, and they've added 10% in that time period internationally, like outside of China. And if Alibaba wants to keep growing, they have to do it outside of China. And that's actually costing them a lot of their margins, which we'll talk about here in a second. But the other reason that I'm thinking that maybe they didn't grow as much within China, which I think China has a total of like 1.4 billion people. So at this point, they're almost touching every single person almost every single person in China is using Alibaba in some shape or form. But the other reason that I think they may not have been able to grow as much anymore, or they're not going to be growing the same way that they've grown in the past, is more competition is entering into the space. You have Pinduoduo, who's now competing actively against Alibaba. I just listened to a podcast talking about just how fast Pinduoduo is growing because of some of the things that Alibaba put into place, and now it's Pinduoduo is using those things against Alibaba. But that's a whole other topic for another day. And the other reason why I think that they may not be growing as fast anymore is because of the coronavirus. A lot of growth got pulled forward because a lot of people who may not have been online faster actually joined last year, and they saw a lot of massive growth last year. So that might be hampering their growth as far as users. However, I am impressed in seeing them actually grow outside of China, grow in the international market, and see how that continues to move into the future. The first thing that I loved was just hearing them say this, and this is a quote from the chief financial officer of Alibaba, Maggie Wu, and she said, "We delivered strong revenue growth of 34% year over year. As we said in the last quarter's results," remember I started investing in between quarters, results announcement, "we are investing our excess profits and additional capital to support our merchants and invest in strategic areas to better serve customers and penetrate into new addressable markets." I love this. This is good news because they're investing heavily back into the business. They're not just sitting on their laurels and being like, oh yeah, we're good. We're doing everything right and everything is going well. So you know what? We just need, no. They're investing heavily back into the business. This just reminded me of something that Jeff Bezos did last year during an earnings call where he told everybody like, you might want to sit down for this one. And then he told them that we're investing every single profit that we make back into the business. Everybody was like, you just became profitable. Like you're just now making money. What do you mean you're investing it back into the business? But this is good news. This is kind of things that for those of us who are long-term minded, who are long-term focused, who want to see this company do well moving into the future, these are the kind of things that you want to be hearing from management. These are kind of the words that you want to be hearing from management. However, there was another part of it where I was like, oh, come on. Like, did y'all really have to like destroy my happiness like that? Like, did y'all have to say this? She continued and she said, we are increasing our share repurchase program for $10 billion to $15 billion, the largest share repurchase program in the company's history because we are confident of our long-term growth prospects. Our net cash position remains strong and we have repurchased approximately $3.7 billion as of April 1st, 2021. A lot of investors will see that and be like, that is awesome news. This is good management. They're doing the right thing. And yes, they're doing the right thing because right now I believe their stock is extremely undervalued, priced at just about $200 a share. So it's extremely undervalued. So seeing them do that is good. However, I'm like asking myself, are they doing this just to placate to Wall Street, or are they actually doing this because they actually are confident in this? Because the way people have been using share repurchases lately, I just don't trust them anymore. And I'll rather them just see them invest back into the business in other ways. However, this is a good thing for investors. It's good news to see them that, yo, we are bullish on our company. We believe in the things that we're putting into place. We believe in the growth prospects of our business. And so therefore we are buying back our own share. But at the same time, as you guys know, I'm not the biggest fan of share buybacks, but at the same time, they have the cash to be able to do this. It's not like they're taking out debt to buy their own share back. They actually have the cash to be able to handle these things. And plus, the amount of assets that they have to debt, their asset to liability ratio is ridiculous. Like they can pay off all their debts if they wanted to. So that's good news on that side of things. And I'm still torn of how to think about them repurchasing the shares. It's good on the surface. It's really good, but I'm like, put that money towards like other businesses. But the other thing, when we start digging into the numbers a little bit more, the other thing that I think spooked a lot of investors is the fact that their net margin actually dropped in the quarter. Their net margins actually dropped this year. But like they said, they're investing everything back into the business, which means their expenses is going up. So we see like net margins actually down 5% from where it was last year. In other words, they're pumping money back into their business to make sure that, like I said earlier, PDD doesn't take them over, to make sure that competition doesn't take them over or run over them. And we can see that with the way that they're investing in marketing. Like I said earlier, they're trying to expand outside of China. And we can see that with the advertising that they did during the Olympics. Like they are advertising heavily during the Olympics and they're trying to expand outside of China to get more users outside of China. We can see cost of revenue. You can see it's gone up from 54% up to 66% and then it's down a little bit to 59%. But I expect that to continue to go a little bit higher than that moving forward. We see like marketing has gone from 8% to now 13% of their total revenue. So you can see they're investing more into the business. However, those are some of the good signs. As you can see, they're investing into three main areas is what I can tell that they're focused on. Is one is their digital entertainment platforms, where just like Amazon has Amazon Video or Prime Video rather, they're doing that a lot more. And Google has YouTube. They're investing more and more heavily into that for those to become more bigger parts of their income source. I believe in this time around, they brought in, it makes up about, here we go. Digital entertainment now makes up about 4%. It's not the largest thing, but that's a 15% growth year over year. And then cloud computing now makes up 8% of their total revenue. And that's about 29% year over year growth. Google brought in or increased their revenue from cloud computing about, I think it was 30-something% as well. And the stock actually exploded because the other thing that is cool about cloud computing, which is one of the reasons that I'm really bullish about Alibaba, is cloud computing is finally net flow positive. It's finally positive. It's finally actually not costing them money to operate, which means that they've gotten a lot of customers to start using Alibaba Cloud, which is another thing that we see with Google. Google announced that Cloud computing is finally positive. I mean, they brought in like $400 million or something like that. Alibaba brought in $340 million on their side, and they actually boomed, and everybody was like, yes, Google Cloud is finally a thing, and da 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 da. But on Alibaba's side, there's so much fear, there's so much uncertainty, there's so much doubt surrounding the company that people can't even see past that to actually see all the other areas of growth that is happening within the company. Overall, when I'm looking at Alibaba, I'm happy. I'm happy with the growth that I'm seeing. I'm happy with the way they're moving forward. I'm happy with the fact that they're investing back into the business. I'm happy with the fact that they're just not chilling, and to see that they're continuing to grow and do new things to make sure that they're taking care of their merchants, providing the services that their merchants need to continue to grow, finding other ways of making money with digital media and entertainment, with cloud computing. And just like Google, I like to compare Alibaba to Google because Alibaba is less like Amazon, like most people want to compare it, and more to me like Google, because a lot of their money also comes from ad services that they serve on their platform. I say Alibaba is like Google combined with Shopify, because it gives the tools to merchants to be able to sell online, but it also helps the merchants advertise through its platform. So I see it as Google and Shopify combined into one platform. And just like Google, also Alibaba also has like those 1% big bets that it has in its portfolio. I think it makes up just a total of like 1%. There we go. 1% total of all their assets. Just like Google has like their big bets. Like you see it all the time when you're going through their assets, where it's just like ridiculous ideas that they're just trying to see if it works and if it could possibly make some money for the company. So that's one thing that we can see with Alibaba as well. And that's actually grown 37% in income that is generating for the company. But as far as it bringing actual money in and being net cash flow positive, yeah, it's not doing that. It's not really doing that much in that sense. It's still very much a loss driven area of the business, but that's okay, because sometimes the loss driven areas is what gives birth to some of the biggest ideas that they end up having, like Ant Financial, Alipay, and all those kind of things. But overall, I think this is a great earnings report from Alibaba that we're seeing this year. There's still a whole lot of doubt surrounding the company, so it gives us an opportunity in the short term to be able to start getting a lot of exposure to the company. I'm not saying this is for everyone. Even for me, I'm not necessarily putting every single dollar that I have into Alibaba, because again, that fear and uncertainty of what exactly is going to happen with the Chinese Communist Party, what exactly is going to happen with the government. Are they going to cancel the structure in which allows us in the US to invest in Alibaba without having to actually invest in the Hong Kong market and those kind of things? So that's some of the questions that is still surrounding the company. However, we see that the business itself, the Alibaba business itself, continues to grow at ridiculous rates. I mean, 34% revenue growth for a company that is this large with this many users already. Like, that's ridiculous to see, but it's great to actually see that being put into place and see them continue to grow, and hopefully they'll keep growing. And finally, when the fear and doubt settles a little bit, we'll start seeing some of the returns on our investment. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you enjoyed it, hit that subscribe button. I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and your boy is out of here. Peace.